This is the big problem. This is the very, very big problem for commercial real estate. This is a wave of commercial maturities that are approaching. In the banking sector, the CMBS market, the life insurance market, life cos, debt funds, and GSE. So you have four main arteries of finance in commercial real estate: banks, CMBS, life cos, and debt funds. If you're in multifamily, you have a fifth, which is the GSEs, Fannie and Freddie. You're going to have $728 billion mature this year, $659 billion mature next year, and then $539 the year after that. Why is this a problem? Because most of that $728 billion was financed at vastly cheaper costs. So let's look at the math behind it. Let's say you owned, I don't care, multifamily office, whatever, property. You had a loan of $10 million. You financed it at 4%. Your NOI, your net operating income on that asset was $600,000. At a 4% rate, your interest cost is $400,000. Therefore, your cash flow after interest payments was $200,000. Therefore, you met the bank's requirement of a 1.5 debt service coverage ratio. Okay? That's how we bankers look at it. We want to have cash flow that supports the interest payment. Now the loan comes mature. You got the $10 million loan. You've got an 8% interest rate. You still have your same NOI of $600,000, but your interest cost is now $800,000. That means you have negative cash flow of $200,000. Okay, so your banker says, what are you going to do about it? Because we're not going to refinance it. So you're going to have to come in, and let's say the banker's nice. I wanted to use a conservative example. The banker says, you know what, I'm going to lower your debt service coverage ratio from 1.5 to 1.25 to help you out. Because banks will finance at 1.25. So I'm going to do that. But at 1.25, you're going to have to bring a check of $4 million to get that loan down to $6 million, because again, at an 8% rate, your NOI is still $600,000. Your interest payment now on $6 million is $480,000. So your cash flow after interest is $120,000, so you meet the 125. This is the problem, folks. You have a massive wave of maturity where people are going to have to cut checks, big checks, to right-size their loans. And if they can't, you're going to have to pray and hope that the lender really works with you, which some will, depending on how much you're going to financially support that asset, or the banks are taking it back, and then that's going to be sold.